I mean, if you're picking at this rally, you could say that looks like a potential lower high, but I wouldn't call this a lower high. I know that's a little confusing because people are like, well, it's put a lower high. For me, what a lower high would be if this takes out the lows, then you have a confirmed lower high. But everything in between is just chop, right? Until you get something that breaks through this, that's a brand new high, or it breaks through the lows, then that would confirm that it's a lower high. But for me, I don't really like to get super, choosy on like, oh, that's a lower high or a higher high. I just really use this simple concept of like, look 20 bars back, mark your high and low. If that goes through those lows, then this is a lower high. If that goes through these highs, then this is a higher low, this is a higher low, right? And then this would be a new high. So for me on the NASDAQ, I've just got to wait to let it choose which direction it's going to go. If it is going to falter here, fall through the lows, perfectly fine. I have some cash on the sidelines, so I'd actually be able to build a bigger and better position, arguably in the NASDAQ at lower prices. What's the correlation between NAS and Bitcoin? It's very, very high. I'll show it to you just for fun. So if I take the NASDAQ and I compare it, actually, let's do this. We'll do, okay. Correlation coefficient. And if I go NASDAQ and then I want to do, let's say BTC, and I just compare this. So, and we scroll out, and let's do this over, let's do a 200. Here you go. So this is the NASDAQ correlated with Bitcoin. It has like an 85% correlation to the NASDAQ. So the point is Bitcoin basically just moves with risk assets. Not to say that Bitcoin is not potentially, has a place in the future or is not an incredible, impressive technology, but it certainly just behaves like kind of like a high risk stock in the stock market. That being said, again, it's been an incredibly impressive performing asset, but definitely still just a risk asset. And I say that as someone, I don't dislike Bitcoin or anything. It's just that it behaves, you have to look at how it behaves. If you were to categorize Bitcoin, it is just basically a super leveraged risk asset. And that's actually kind of how I trade it. I trade it basically as a, very volatile risk asset. NASDAQ and S&P both down here a good bit today. I've been saying this and I'll continue to say it. I am pretty bullish on these things. So if they give me dips, I am looking to be a buyer. Stock market opens up here in just about 30 seconds, guys, which also should be interesting to see how that goes. I also wanted to check the put call ratio here. So I added some lines here on the put call ratio, the extreme fear and the extreme greed measurement here. I actually think this is pretty helpful to those who are newer to the put call ratio. It is basically just a way to track the volume of puts relative to the volume of calls. And what we see here is that typically when you're getting like really, really optimistic markets, like people are feeling really, really strong about the stock market's performance and things like that, the put call ratio gets really low, which signals that people are out there really buying calls aggressively. And when everybody gets really one-sided in the market, oftentimes it's a good actual contrarian signal. So like over here, we reached a very strong level of extreme greed right around the election. People were really scared. Who's going to win? What's going to happen? And it actually was a wonderful buying opportunity. So if we go back just to, November 4th, right around the election, let's go look at the S&P. So here's S&P on the election day. Following the result, boom, S&P just went bonkers to the upside, right? It's given back some of those gains here, but in recent times, but you can see following that, everybody was scared. Oh my gosh, what's going to happen? Once we got, a decisive win, Trump won the election, and the markets just took off running. Partially, I would argue, because Trump's pro-business tax policies and less regulation stuff definitely are preferred by the stock market. Big companies love tax breaks, right? That just means more money in their pockets. but also because there was just no longer that uncertainty of who's going to win the election, right? That uncertainty kept stocks kind of at bay, and then when that was lifted, boom, off we went. NASDAQ, S&P out the gates. Let's just take a look here at the opening candle here. 9:30, of course, whenever that rolls around, the stock market opens up for the US, and volatility usually picks up here in the New York session. So we'll see.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
NASDAQ down about 1.5% here, S&P down 1.35%. Dow Jones also down, and the Dow has been just getting killed, guys. I don't know if you've been seeing this. Dow Jones came up to this resistance and just dropped right again. The Dow, by the way, has actually given back like all of its post-election gains, just about. Largely because, again, a lot of the healthcare, like UNH, the big United Healthcare company, a lot of people are real scared about what Trump and friends are potentially going to do in the healthcare world. I've actually gone out on a limb. I actually think that healthcare might be a great contrarian play for next year. And I have a bullish position currently on XLV. What I've done on XLV is I actually sold puts. I sold the 138 puts out about a month from now, just a little bit less than that, maybe 20 days or so. So we'll see where that goes. I wouldn't mind getting assigned on that. Basically get long around 138 on XLV. It's a bit of a contrarian play, and it's not like a short-term trade or anything. It's definitely just a idea that I have for next year. I think that the healthcare world there's definitely some potential challenges with change in administration. They may be out for some change in that world, but I kind of think that the rumor and the fear around like how much they're going to do to the healthcare world is probably overstated compared to what actually will happen. And additionally, healthcare companies, a lot of them just make so much money. They're very, very cash. They're like cash printing machines. So there's a lot of great companies in the healthcare world. And so I basically have a position, XLV, a bullish position on the healthcare sector as a whole. And that's got many companies in it. Johnson & Johnson, Pfizer, United Health. I mean, so many companies in the one symbol, which is kind of why I like trading ETFs. So let's see, NASDAQ down 1.75 now. Let's see if we can react to this support level. This is a pretty key spot on this chart. So support around 21,175. Let's see if this can hold here. And if it doesn't, right, if we start heading down through these lows, again, my plan is to stop out of my position if we break through that Friday low. Was that a Friday? Yeah, Friday low back here. So if that takes out those lows, that's going to be the signal for me to go ahead and cut that trade, take a loss on it. Take a look at gold here out the gate. Gold's down 0.5%, really still not making any decisive move in either direction. You've got, again, a little bit of support coming in here around these areas, but then, again, just not really making any decisive push one way or the other. Somebody asked about my thoughts about gold under President Trump, if that causes any changes. Gold is just so mixed for me in so many ways right now. You have a lot of geopolitical uncertainty, which you could argue could be potentially bullish for gold, right? Ukraine, Russia, Taiwan, China, trade war stuff, right? That's a bullish pressure thing. But take a look at yields and the dollar's strength, right? Yields are up and away. Basically, the bond market right now is telling you that they think the Fed is not going to cut rates next year. That's what the bond market is telling you. When you look at yields and you look at the dollar and you see all this strength, you see, look, other central banks are cutting their interest rates, and the US is probably not going to do a whole lot of that because the US economy is so upbeat. That dynamic, right? Employment's pretty good. GDP growth is still strong, right? You look at that and you say, okay, they probably don't need to cut rates that much next year. If that's the case, the bond market is shooting up here, the yields on those bonds, and factoring in, hey, is there going to be a reflation event? Are we going to actually see inflation come right back if this economy doesn't cool off, and or if some of the policies that get put into place are inflationary? I don't know if they will be. A lot of economists are on both sides of that matter, and I'm not a brilliant economist. There's people on both sides of that argument. People say it's going to be inflationary. Other people are going to say it's not going to be inflationary. But the point is, the bond market is saying we don't really know, and inflation could continue to go higher. So maybe we need a little extra juice on the bonds that we're going to be buying. So yields need to go up on the bonds we're buying, right? That's what the bond market right now is kind of signaling. And that also signals that they think that the Fed is not going to cut rates next year that much.
Aussie yen, sorry. CAD yen, Swiss yen, Euro yen, they're all falling today. And I think it was on Friday. I think it was on Friday. That is 27th. That is on Friday. On Friday, I said I'd take profit. And then I also said, if you want to have a free meeting with me, you send me a DM and then we can set that up. I took profit there, and it went a bit higher, but then now it's fallen. It comes back down to, do you believe in your system? Do you believe what you think? Do you believe what you're supposed to be doing? Because I had a meeting earlier today, and the person was like, well, I didn't sell. Well, my friend sold euro dollar. And then my question is, why didn't you sell euro dollar? You should have sold euro dollar if that was your plan and what you're supposed to be doing. Oh, I was nervous. Oh, I was anxious. But then it's not your trade. It's not. You're supposed to believe, or not believe per se, you're supposed to trade, you're supposed to find out, you're supposed to check balances left, right, and center in terms of what is your setup supposed to be, what situation are you supposed to be. And for euro now, this morning, it falls a bit more, it continues to trend, also dollar continues to trend, pound dollar continues somehow the bearish trend, and the dollar yen somehow continues the bullish trend. Now, what I do, somehow at least it's falling now, what I do is I try to encourage you guys, okay? I've shown you my trades. I've shown you what I did. I took profit on Friday. It went higher on Friday. I didn't get the best price. But all the trades that I exited on Friday are all now a better exit than the current price. So I feel like I did something right. Because in my opinion, somebody asked me, why did you take profit? And I said, most of the time on yen pairs, 27th of December is the high for December, if it's not 15th. So I did so. I believed, and I used the system that I trade, and I didn't second guess it. But I see a lot of traders in this group second guess yourself. Okay, so somebody said gold is not moving anywhere, like it's not great, it's not great trading. Okay, so my answer to that is, where is US inflation? Is US inflation trending higher? Is US inflation trending lower? Is the 10-year T-note trending higher, or is it trending lower? Is the stock market trending higher? Is the stock market trending lower? Again, the triangle, where do you put your money? In gold, or commodities for that matter, in commodities, in indices, or in bonds. So right now, people are moving into bonds. Gold is, well, it's somehow there, and today they're exiting S&P. They're exiting indices. And for you to think, okay, what is going on here? Why do they do so? Well, it is A, B, C, D, E, F, G. It's probably because of Trump, maybe the Christmas rally never happened. So they're like, well, let me exit before the New Year's. Let me take profit, let me take the losses, let me do whatever I need to do for me to do A, B, C, D because of tax reasons. Or because I need to be compliant with the mandate of my fund. Okay, cool. Great. But where is S&P going? Where's dollar going? Where's gold going? And where is, for that matter, yen pairs going? And in my simple opinion, is where's CPI going? And somebody asked me also today, Ivan, where is dollar going to go? Like, tell me about when fundamentals make market move in a certain direction, right? I don't know. So what are we here for? Basha says market's moving kind of weird in December. What do you think? It's kind of trading like Sato's trading. Okay, that's your opinion. For December, we're kind of flat or negative now. For yen pairs, dollar yen, it's kind of very bullish. For euro dollar, it's been very bearish, I would argue. A good 100, 200 pip move. See, 1st of December, 150. Okay, relatively bearish. So where's this coming from? I would argue it comes from what I want you guys to come to take away from today is, what is your plan? What is your plan? And what can you plan? What can you decide? What can you control? Now, if I take S&P 500, we saw 2 minutes ago that Nick is in loss on this NASDAQ trade. And I'll be saying, okay, I don't want to trade this market. Why do I not want to trade this market? Well, when I see falls, like about your highlight, until we have started to go higher again, I'm waiting. Okay. So what does that mean? That means that I need a deeper pullback. What's a deeper pullback? This is a deeper pullback. This is somehow a deeper pullback. This is not a pullback. So currently we are about down 4.5%. It's within the range of 5, which I've said before. I want 5 to 10% fall. So when we are coming closer to 5, which is around now, that's great. I want to look for a reversal. Could I have bought here? Yeah, but I knew, or I wasn't at the market at the point. I don't know. Maybe. So if we reverse again, okay, I'll take it. Fine, I'll take it. If we break 20,800 or whatever that's on S&P 500, doesn't matter. I'll look for that reversal at a lower level. That's what I can control. My emotions are in check. My outlook is in check. Maybe I will be wrong because of tariffs, because of A, B, C, D, because of winter is going to be cold, or the moon is blue. I don't know. It doesn't really matter to me. I just need to wait for my technical reversal. Why? 1, seasonal analysis is bullish. Technical is currently not bullish at the moment, but it can turn bullish. Funda is bullish. Sentiment, sentiment is very overbought. Okay, let me wait. What's your thoughts on dollar Swissy? You know what? Who was it? Swampy. When I saw Nick pulling up dollar Swissy, it really broke my heart. I have to say that. Because I'm wondering, where was I? where on earth was I? Like, it's the easiest trade. Just buy the bullishness. And then I've been doing other things, apparently. My brain hasn't been braining for some reason. But yeah, it's higher. You see the Swiss is bearish. Pound Swiss is somehow bullish. Also Swiss, okay. So maybe only dollar Swiss. Fundamentally makes sense. Sentiment makes sense. Trending wise makes sense. And I believe I made this on a Friday. So I may have done this type situation on a Friday. It would be up here. Yeah, before it fell. And then it came down to my level. Wouldn't you imagine it, huh? But I have a problem. It's at the monthly target for the month. What does that mean? It only means nothing else, and that is the projected high. Before a pullback, before we continue higher. It can continue higher. It doesn't matter. It can, it might, it will. I don't know. Sometimes in between. But what is of importance is that I didn't trade what I was supposed to be doing. That's my plan. I should have traded that. So my thoughts is a bit of anger, a bit of disappointment, and a bit of that actually makes sense. Why is it so? Because Swiss is currently cutting interest rates. Dollar is, they're still cutting per se, but they are cutting less than expected. That means a bit of short-term correction bullish.
This is just me kind of tracking the Santa rally. This was as of Friday's close. So we started here officially with the technical Santa rally. We closed here on Friday. Essentially, it was flat. And then today we opened up around 588 to 587. So Santa is officially in the red. And looks like this is, this is why there's no guarantees in trading. Okay, crazy statistics. You go back 70 years of trading. We have only seen back-to-back losing Santa rallies 2 times. And so we did have a losing 2023 Santa rally. And right now, looking like another back-to-back. So if you think about this Santa rally for 70 plus years of trading, it's only happened 2 times. Somebody might argue and say like, well, that probability is that the Santa rally is going to be positive. You're right, but this market's going to have to claw back in a pretty big way, because right now to get back to positive territory, we would have to see the market go right back up to around 1.7 to almost 1.9% in gains just to get back to 0. So to get flat for the year, we'd have to go up about 1.8% for the Santa rally. Now the market's still hot, the market still had a great year, right? I mean, we talked about this many times here the last month or so. It's like, look, I think that this market is a lot easier to trade if we're starting 2025 at a discount. Okay, now we might be looking at some real-time news, like what's leading the way right now. Let's have a look. We've got some big gaps. I mean, this is the interesting part about holiday trading. We had a gap right here. We have a gap right here. A lot of traders are probably looking at this and saying like, this could be a topping pattern. This could be a head and shoulders pattern. It certainly can be. Look, this box is measured from my all-time high. This is the all-time highs we just had going back to the 6th of December to the FOMC low. Okay, so if I take that swing and I project some symmetry, it's not a surprise that symmetry gets us right back into where? The election gap. So could this be where the market's satisfied? Like, okay, the S&P, falls to fill the election gap. Is that a spot to get some strength? Sure. But if this is hey Heather, how are you? This is a symmetry play. There's also that potential. I mean, if we know patterns, we have a symmetry play, okay, and we also have the measured move based on the neckline. Let me show you what that looks like. So if I draw a box here, let me see if I can move this over. Well, you get it. So if I have a symmetry play, so I'll go high to low. Okay, so I see a top to a bottom. I look at a swing. Symmetry would be that. So we go high, low, lower, high, lower, low. That is this measure move right here. So if we go high, low, lower, high, lower, low, that's symmetry. That'd put us right around this 572 area. I take that back, 574 to 575. So if you want to make a note here, 574 to 575, that's going to be a symmetry area. Again, notable correction. That puts us back inside the 100, between the 100 and the 144 daily moving average. Is that an attractive spot to look to get long? Sure. Now, the other side would be that we have a break of the neckline. Okay, if we break the neckline, doesn't matter if price comes back to retest it, you just measure it from the break of the neckline. So if you take a swing from high to low this way, okay, and then rather than using symmetry, you look at the break of the neckline, and that would be your projected move. Now that projected move, get rid of that, and that head and shoulders would be a measurement from this low to this low, or from the FOMC low, right? I mean, it's not going to be perfect, but it's going to be pretty darn close. So that would put us right back into roughly the 200 moving average, or if you go from the FOMC low, it's almost perfectly sitting at that 200 moving average. And that's also why, I mean, you could go back for the last 2 or 3 months and see how many times I've mentioned, I think we're going to find a 200 moving average on NVIDIA, Meta, Netflix, SPY, right? It's the bar count. This hasn't hit the 200 moving average since November of 2023. So we're over a year into this bull market with a little, April, August hiccup. And if we have a little topping pattern here, we start out, we get to, I just think it's a good spot to balance out, Also, let's see what the heat map looks like. But do you understand that all we need to see here is some end of year profit taking, and this market can start to drop? Because where do you think most people are taking profit? Most people are probably taking profit on their Mag 7 exposure. The inflows that the Mag 7 is seeing, the inflows into, everything tech, everything consumer, or what would be communication services, technology in the sectors. Mag 7's like 30+% of the market. I mean, it's super high concentration. If we just have financial advisors right now rebalancing their portfolio for a percentage. So let's say they've got, Mr. and Mrs. Smith with a 10% allocation into Mag 7, right? And they could just buy individual stocks, or they could trade the mags, they could trade the buckets, they could trade the ETFs, whatever they want. But if it's a 10% allocation, okay, that 10% is probably worth 20% of their portfolio now. It's been such a good performance. It's essentially carried the broader market this year. Yes, we had some broad market a little bit here and there, but it wasn't fully sustainable, right? If you want to see broad market, look at the Russell, right? The Russell's not representing, good gains this year. The Russell's given back all of it. We had that huge squeeze post-election right to the tops again, and we're pulling right back. I mean, I don't know if I want to touch the Russell until this thing comes back down to like 200 or maybe 170. I could be wrong, but there's so many unprofitable companies in this Russell 2000 that I'd be interested in maybe like one of the derivatives, like trade like the Russell 200. That's supposed to be like better concentration, better performance. Get rid of some of the crappy positions. Okay. So also, Mark's mentioning it appears somebody's moving into bonds. Are we seeing bonds up today? I mean, if bonds are getting a little bit of safe haven run, that's a good thing. I mean, US 10-year down 1.9%. It's about effing time. But is this going to be sustainable? I'd like to think so. Does everyone know right now that we've had like the highest correlation between stocks and bonds like almost ever? Let me see if I have a screenshot of this. I just, of course, did the typical deep dive into some content this weekend. And we have here, let's see, some catalysts for this week. We have the interest expense on the federal debt is now over $1 trillion. The second largest outlay in U.S. government spending, surpassing defense and health spending by $300 billion. We saw $35.3 billion in net outflows within a single week. That was last week. That's the largest outflow since December of 2022, signaling some potential liquidity concerns. We've got China that is potentially facing deflation. Their government bond yield is falling. The Fed reduces its balance sheet. There could be a bit of a liquidity crunch in 2025. If the Fed continues to reduce its balance sheet while pausing and maintaining rates and being more restrictive, if the market's grasping for liquidity, grasping for easy money, grasping for M2, if it's not getting supplied by the US and China, we could also see a bit of a slowdown.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.